It is time yet again to go over all of your Tesla stock breaking news and what's going on in our market. First and foremost, let's start with this. I find it very fascinating. A new article from Barron's out today. It caught my attention because the headline says Tesla stock has shot past Wall Street targets. It isn't as risky as it seems. And it says here, Tesla stock has moved substantially past the average analyst price target 4 times before the current one in the past 5 years. Each time shares moved substantially past Wall Street targets, shares were higher 3 months later. The average move was up 85%, a huge average gain, but there's no guarantee that that will happen this time. The trading pattern has worked in the past, essentially because the market bid up Tesla stock ahead of significant improvement. This time, a rebound in EV sales, Elon Musk's recommitment to his EV company, and artificial intelligence opportunities have investors buzzing. If those 3 things result in higher earnings estimates or faster growth expectations, analysts will raise their price targets, catching up to what investors have recognized. Earnings estimates should finally be moving higher in the short term. At the start of the year, Wall Street expected Tesla to earn 90 cents a share in the second quarter. That estimate is down to 60 cents, with slowing EV demand growth weighing on investor sentiment. That 60-cent number, however, looks like a layup after better than expected deliveries. Tesla also sold more battery storage products in the second quarter than expected. In the long run, Tesla will need to sell more EVs and demonstrate it can make a lot of money from AI technologies it uses to train self-driving cars and humanoid robots. In the short term, things look much better for the stock than at the beginning of 2024. So that was a very interesting point. Over the past couple of years, there's been 4 instances where Tesla has blown past the average analyst price target, which today is $193.72. And when Tesla does that, it actually ends up on average going 85% higher than the average analyst price target, which could roughly put Tesla's stock at about $360 per share, which, as I'm sure most of you guys have seen over the past couple of days, I do think Tesla stock likely hits new all-time highs by October. A couple different reasons for that: the lack of investment into Tesla for many years, that catch-up effect where investors have to start paying attention to Tesla's AI prospects. That's one part of it. You have a massive short interest that likely starts to get covered. You have Tesla's earnings on July 23rd, which are going to be great. And you have the robotaxi event on August 8th, which, if we get a definitive start for robotaxi in 2025, that's going to totally rewrite the modeling for Tesla and the profitability expectations, EPS expectations, and all of a sudden Tesla's stock could get cheaper if we're expecting a launch to robotaxi in 2025. That's what I expect. If we don't get a launch in 2025, then obviously Tesla stock is going to sell off. But from that point of view, I think it's pretty clear cut. Tesla stock at all-time highs by October, by the end of this year at the bare minimum, as long as you get robotaxi launching in 2025. If you get robotaxi in 2026, expect it in 2027, which I'm not expecting. I think it'll come in 2025. Then I would expect Tesla's not going to be at all-time highs by the end of this year. But judging on what I can see, you're probably going to be at all-time highs pretty soon. Now, obviously, I could be wrong. It really depends on what happens in the economy. With the markets, we are overextended. There are troubling signs of maybe a larger correction coming. So keep that in mind. I mean, just take a look at this post from James E. Thorne on X. He is the chief market strategist at Wellington Altus, and he shares an image from the Fred government page and says, employment usually work full-time. It's negative 1.2% year over year. This is a foolproof, 100% accurate recession indicator. Anytime this goes negative, you're in a recession. The market's currently expecting over 11% EPS growth for this year for the S&P 500 and about 15% EPS growth next year for the S&P 500. There is no recession priced in at all. If that were to materialize, that would obviously be kind of a wrecking ball to our markets. Tom over here on X says the S&P NAAIM reflects the overall sentiment of active investment managers that hit 103.66 on Friday. This usually marks short-term tops with consolidation and pullback soon. This is not a crash call, just a 2 to 5% pullback in the horizon. And again, just to be clear, I think we get a 30, 40, 50% pullback if we start to actually go into a recession. If the data gets worse, if the Fed makes an error, starts cutting rates, that's where you get the larger crash. But I think a simple 10% correction, 12% correction could happen soon, probably based on earnings. I think earnings are priced for perfection. As you have seen from many, even on Wall Street, that have suggested earnings are priced for perfection. And there can and likely will be some disappointments out there. You can also see from this video that's titled "Retail Traders Expect More Trading Volatility in July," according to Charles Schwab's latest report, that at least retail is starting to expect more volatility.
New read from Charles Schwab's Trading Activity Index shows that retail investors expect volatility to increase in July. So let's bring in Charles Schwab's Joe Mazzola to discuss. Welcome, Joe. Good to have you with us. So investors are looking for more volatility in July. It certainly has not, apparently, as you report, affected their appetite for equities. They're still buyers.
That's an important point, and we're going to look at this from two different lenses: the behavioral and the attitudinal. So the Schwab Trading Activity Index report that you're mentioning, that's behavioral. So basically, you saw a lot of buying activity in June. A lot of it was concentrated in some of the AI named or AI themed names that you guys were just mentioning. A lot of it tech heavy. Interestingly enough, though, Tyler, is that when they talk about the volatility, there's concern around some of the valuations in AI moving forward into July. And so what we're hearing from our clients is that they're going to stay long. They're definitely more bullish than bearish, but they're moving a little bit more towards a neutral stance. And I think that makes sense, not just from a valuation standpoint, but just from some of the other activity that we've seen in the market as well, too. Some of that divergence that you guys were mentioning.
But am I right or am I not right that a lot of the money that you're seeing come inbound is still going into names that have AI attached to them?
No, you're absolutely right. And I think that there are some names that still present a little bit of value at that point. But I also think it's important. One of the things that we've been talking about with investors is, if you're going to look at some of those names, what could be maybe an exit strategy or a different way to maybe augment some of those returns. Some of the things that we've been pointing out is just kind of looking from the options market, something like call skew, looking at some of the skews on some of these names are really, really elevated, meaning just something as simple as a covered call is a way to maybe soften some of that downside should you get a pullback, or use that as a way to reduce some of those shares if they continue to rally through earnings. I think that's important. And I think tech as a whole, when you're looking at earnings in the next month or so, it's a big driver for the markets.
So investors are still buying tech names that have AI related to them, but they are getting a little bit more nervous. I think that's quite a bit of Wall Street right now that's starting to call for a correction. But calling for a correction and actually positioning for one are two totally different things. You can see this from a bar chart that was out about 12 hours ago. It says total put to call ratio drops to the lowest level since January of 2021. So puts are like non-existent in our markets, and people just have calls. And the last time you were at this level, besides a brief little spike down here in June, was back here around November of 2021. And that was precisely the top for the markets then. And then you did see the puts start to rise again. I don't know if that's where we're at, right? I don't think this is the top of the market necessarily. But another sign that we're probably due for some kind of large correction. The good news for any of you guys that are watching this video that are likely Tesla stock investors is that I think it's going to be more of a rotational correction. I believe earnings are going to come out. They're probably going to be good across the board, but not enough to impress. And it won't surprise me if big money sells off some of your stocks that have been big winners, some of your big tech stocks, and that money rotates into other areas. Perhaps Tesla could see some more inflows. Given what you've seen recently, there's going to be a lot of catching there, and there's a lot of momentum now with Tesla. There's a lot of enthusiasm, and there hasn't been that for Tesla in a long time. So perhaps Tesla could get some more inflows. Perhaps quality small caps could get more inflows. And I think it's possible you could get a full-blown correction in the markets just based on your big tech names selling off, but you could actually see Tesla continue to rally at the same time. I don't think a correction from that sense needs to affect Tesla. After all, if you think about what a correction is, literally the word correct, right? You're correcting something that went too far for too long. That's not Tesla. Not even close to Tesla. And what we're about to see, I would define as a rotational correction. Then again, I'm subject to be wrong, so let me know what you think down below in the comment section. I am expecting here between now and July 23rd that we could see some red days. Just overall, heading into earnings, the expectations are earnings are going to be really good via the rundown to inventory. That should really boost free cash flow a lot. And then also the energy generation and storage, that over 100% rise, 123% rise quarter over quarter. That's going to be really good for EPS as well, as that is the highest margin business for Tesla. So we're already expecting earnings to be good. And I think that's a lot of what we have already started to price in. And I wouldn't expect any kind of big fall, maybe back down to the 235 level or so. That could make sense. Maybe back down to the 240 level. And then the stock's probably going to take off from July 23rd until the robotaxi event on August 8th. That's the period of time I'm expecting quite a bit more upside to actually potentially test that $300 level. And then I think after that, you can make a $100 move from 300 up to 400 pretty easily, as long as Tesla is forecasting with a degree of confidence the launch of the robotaxi network in 2025. After all, I don't think there's a point of having this whole event on August 8th with no foreshadowing of when you're actually going to be able to launch the robotaxi, right? I think Tesla's going into it with an idea of when they're going to launch the robotaxi, and I think we're going to get some guidance for that, and that's what causes Tesla stock to really run. But again, from now until July 23rd, it wouldn't surprise me if there is some marginal downside. I don't think, for the foreseeable future, you're going to get any kind of large downside. But some, a little bit, call it 2%, 3%, 5% from here, that wouldn't surprise me. And I would actually say that's a good thing if we get a 5% pullback before we do get Tesla earnings. Because after that, the excitement's going to turn to the robotaxi event, and you want some downside. You don't want Tesla to just run with no downside at all, because eventually that does set you up for sharp, large moves down, even if things are going well. And then again, Tesla's RSI is sitting at 85, so that would also suggest you should probably see a little bit of a downside move to correct that RSI a little bit, at least before we go on the larger run to new all-time highs, I believe, by October. Sentiment today for Tesla over on StockTwits is bullish at 62, which is welcome to see, because a lot of retail has been pretty negative on Tesla. At least the sentiment barometer over here on StockTwits has been pretty negative over the past couple of weeks. Seemed like a lot of retail investors were maybe unhappy if they missed the rally, but over this weekend it looks like they're getting back to being bullish. Message volume today is low at 39. 1 day ago it was normal at 52, and the participation ratio today is high at 55. In a welcome sign for Google Trends, you could see, I guess this is welcomed, you can see the Cybertruck that's falling from 78 to 72. You're still at crazy levels for search trend interest for the Cybertruck, but you're actually seeing the Model Y go from 27 to 28, the Model 3 go from 24 to 26, the Model S go from 11 to 12, and the Model X staying at 9. So you're actually seeing another little bit of a ramp up in the search trend activity for Tesla model. Google Trends data for full self-driving is sitting at 20 today, which is still a lot higher than where you sat basically any other time in history, in the mid to low teens. So search trend activity still looks good over here as well. Over the past week, from hedge funds and institutions via the interesting flow sentiment, you have seen 390 different trades totaling $150 million with a positive order value of 70%. If you take a look at the short interest of free flow, it is at 3.84%. You have $26.19 billion currently sold short. That is up 55% in the last 3 months. So short sellers have just taken massive beatings in their Tesla short positions, and I think that's only going to get that much crazier and potentially even cause a short squeeze that helps lead us to all-time highs. And we'll talk about that a little bit more in the next video. You do have 106.43 million shares that are currently sold short, and you can even see on Friday you had cost to borrow fees of almost 10%. You had shares that were covered of 2.16 million and borrowed shares of 4.08 million. That means on net, you had 1.93 million shares that were sold short. So even though Tesla stock continues to go higher, there seems to be a lot of denial from big money, and it's not going to end well for them. Here you can see Jeffrey Osborne with TD Cowen has been the latest price target increase. He still rates Tesla stock a hold, but he did raise his price target from $160 to $180 per share. And it looks like Elon Musk just debunked a recent rumor. Car Dealership Guy says, so the rumor is that Elon hired Uber's founder, Travis Kalanick, to advise or potentially run Tesla's upcoming robotaxi division. Can you imagine? Elon Musk says false. And other than that, there's really not any other Tesla stock news today. So we'll go ahead and leave it off on that note. Let me know what you think about all of this information here in this video. Hit the like button as well as subscribe to the channel if you have not done so already, because why not? It's free 99. It costs you absolutely nothing to do so. Most importantly, ladies and gentlemen, enjoy your Sunday, and I will see you in the next one.